I feel like I talk about the retail market more than I probably have to, but it's just such a integral part to our entire world, right? Like, you're going to drive anywhere, you're going to see stores. You're used to brick and mortar. You grew up this way. I would imagine you're my age. You're 35 or you're older or you're a little bit younger, but I mean, you're used to it. You see restaurants and retailers and shopping centers and grocery stores and movie theaters and everything in between in this brick and mortar world that we live in. Because while the internet is still in its infancy, I mean, let's just face facts. We're so new into this technology. I say infancy now, but if you look back 1,000 years from now, you'll look at these first 20 years of the internet being mainstream, and you'll kind of laugh at what we're doing right at the moment. I'm Cody from Wall Street Breakdown. Bloomberg had an article today that really summarized what I think about the retail world. See, there's been 3,200 net store closings, retail closings in North America this year, in the United States actually. That's pretty big, especially when you consider that we hear a whole lot about retailers and the people that house them, shopping center owners, mall owners, strip mall owners, any kind of REITs that do commercial stuff. You hear a lot about these companies struggling. So in an up economy, when things are going really well and you're hearing about struggle, what happens when things turn south? And a little bit of that debt that both these type of companies, retail companies, hold a lot of debt, and mall owners, strip mall owners, and the like, they hold a lot of debt. They hold a lot of debt, and things aren't going very well for them as of right now. And we're in a solid economy. Now, we've got interest rates turning around, going up. What's going to happen is that starts to put a little pressure on people who are already just making the bills. You can only imagine, right? A lot of regional banks are really on the hook for a lot of these retail companies too. That's where the largest amount of money being borrowed from is not from the major banks, but a lot of the money is being borrowed from these regional banks, a few of which are really on the hook. There's some banks that got 20, 30% of their money out there loaned out to companies that are kind of on the fringes a little bit of being able to remain sustainable. That's huge when you're in business. You need to be able to keep your doors open. You're not going to be able to run a Target store out of your trunk. And we see Sears is closing down and Target's closing down. We did an earnings call yesterday from Monday about Michael Kors closing, 40 to 50 stores as opposed to 20 to 40 stores, and that being a good thing. That was smart on their part. They needed to close those stores to focus more on their online. You see, there's about there's only about $100 million in junk debt in 2017 that's going to come due from the retail sector. It's nothing. $100 million in junk bonds, that's not a big deal. Next year, though, in 2018, $1.9 billion. Where does that money start to come from for people who need to be able to pay off all of these bonds? When does that paper just go bad on you? You want to know something? 2019 to 2025, they're estimating about $5 billion in junk debt every year coming due, specifically from the retail sector, whether it be the actual brick and mortar store or whether it be, again, the shopping mall owner, the REIT, whatever you want to call it, whoever owns the actual infrastructure. That's a lot. For companies that are already not doing very well, an economy that's very, very strong, when things turn around and a lot of these debts start to call in, this is the industry that I've been the most trepidatious about since the beginning of this channel, since we started to talk about this, and I've been trepidatious about this with everybody else I speak to about the financial world for many, many, many years. I've talked to people about the difference, the change in oil. I remember having discussions with people here in Alberta about the changes in oil and when fracking really started to take hold, and the difference between the peak oil that we thought we'd been at and now, and how that was going to change the Alberta economy. And people didn't really want to listen. They really thought things were going to remain the same. We're really feeling it here now, in retrospect. It just is what it is. Retail, very much the same way. I warn people against things like Bitcoin and stuff too, because while retail is something that's very strong in the sense of your mind, you can recognize a Coach store or a Victoria's Secret store, a Sears store. You relate to that stuff. They're not strong in the pocketbook. So while you have personal feelings towards them, they can resonate with you. Unfortunately, banks don't pay bills with feelings. So when it's time to pay your debts, when companies like this just can't keep up with Amazon or whoever else is the competitors that happen to be snuffing them out, whether it's just the fact that prices have gotten too high and logistically it's just not feasible to run it anymore, somebody's going to have to go. And I think a lot of them ultimately are probably going to end up going in the long run. And we're going to see a lot of strip malls and malls being half empty or potentially just being closed and that stuff being redeveloped, because there just isn't the type of money in 2017 in a retail store that there was in every year previous to this, and it's getting worse and worse. Bloomberg covered it today. I'm giving you the Coles Notes of what Bloomberg had to say. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, click the notification bell, thumbs up for this video, all videos, thumbs up for you, because you're here working hard trying to figure out what to do right with your money, and that deserves serious props. And leave us a comment. We love hearing from you. We want to know what you think about stuff, and we just want to know that you're having a really good day. It's a heck of a Wednesday, isn't it?